Dow falls 890 points and tech stocks plunge amid economic fears. U.S. stocks sold off sharply on Monday, with major indexes posting their steepest declines of the year amid growing signs that the economy may be on a weaker footing than previously believed. The S&P 500 dropped 2.69%, its worst day in months, while the Nasdaq Composite plunged 4%, driven by sharp losses in technology stocks. The Dow Jones Industrial Average fell 890 points, or 2.08%, and the Russell 2000, which tracks small-cap stocks, declined 2.38%, signaling weakness across the market. The bond market reflected growing investor caution, with yields on U.S. Treasuries falling as traders moved into safer assets. The 10-year Treasury yield slid 9.19 base points to 4.226%, while the 2-year yield fell 9.8 basis points to 3.904%, indicating expectations for slower economic growth. A basis point is a 1/100th of a percentage point. Bond yields fall when bond prices rise. Over the weekend, President Trump appeared to acknowledge the possibility of an economic slowdown, telling Fox News that there would be a period of transition as his administration implements major policy changes. Meanwhile, Commerce Secretary Howard Lutnick pushed back on recession concerns, stating on NBC, "There's going to be no recession in America." Treasury Secretary Scott Bessent said in an interview that the market and the economy have became addicted to excessive government spending, and there's going to be a detox period. That is widely being interpreted as a sign that the administration is willing to accept some economic pain, and as a sign that the administration is willing to accept some financial market declines as it reforms American economic and trade policy. And while some analysts blame the downturn in stocks on policy uncertainty or the Trump administration's tariff plans, there was little in Monday's sell-off to indicate that as the primary factor. And indeed, the information technology sector, which is likely to be little affected by trade policy, led the decline, falling 4.34%. Communication services also dropped 3.54%, dragged lower by large-cap internet and media companies. Consumer discretionary stocks followed closely, down 3.9%, as concerns about slowing consumer spending mounted. Financials declined 2.29%, reflecting concerns about tightening credit conditions and recession fears. While stocks have been volatile in recent weeks, Monday's decline suggests that investors are reassessing the strength of the economy. Hiring has softened, consumer sentiment has shown signs of strain, and inflation remains persistent. The Atlanta's Fed's GDP Now barometer of the economy currently says economic data show about the first quarter of this year suggest a growth rate of negative 2.4%. Most economists, however, expect that more data will boost GDP growth estimates to positive territory in the coming weeks. Friday's jobs report showed that the labor market remains steady, but with signs of cooling at the margins. Wage growth has slowed, and labor force participation has not rebounded as strongly as hoped. These factors have contributed to a more cautious outlook for corporate earnings and economic activity in the months ahead. At the same time, consumer spending, the backbone of the U.S. economy, has begun to show cracks after holding up stronger than expected in late 2024. With higher borrowing costs and persistent inflation, many households appear to be pulling back, raising concerns about economic momentum heading into the second quarter. Federal Reserve policy remains a key variable. The futures market has gone from all but ruling out more than 2 cuts by the end of this year to pricing in as many as 4, an indication that traders think the economy may weaken enough to stir the central banks out of its current paused stance. This is by Breitbart on DNYUZ. Please leave your comments, and thank you for your support. Please support my Patreon account. The daily posts are 5 videos daily, and they are totally different from what I have on my YouTube channel. Thank you so much for your support. and that you find all my content so interesting. You'll find the Patreon account details in the description box below.